Hey, what's up everybody? Brian here with J-Line, helping others achieve greatness in every part of life. Today we're talking about the best time to buy when it comes to stocks. In this video, we'll just go over some basics. Of course, I'm not an expert, but I'll teach you what I know, just a little bit. When looking at stocks or the stock market, you might see things that go up like this or down like this. What does it all mean? So on a trend like this, it's going up, and a trend like this, it's going down. You have your highs and your lows when it's going up, and you also have your highs and your lows when it's going down. Just higher highs and lower lows. There's many different strategies when you're looking at stocks, but I'll just share a little simple one right here. Basically, you'll draw a line through the middle, cutting off the very highs and the very lows. One on the top, one on the bottom. One like that, and one like that. Now, when looking at this would be overpriced, this would be underpriced, and this right here in the middle would be the middle range. And from here to here could be a week, a day, a month, a year. Basically, the way you could think about it is up here would be the time to sell, down here would be the time to buy, in the middle could be the time to hold. Now, let's zoom in right here. Now this price would be the same as this price over here. But as we zoom in on this, it may look like this. And you could do the same thing on this graph as well. Can you see that? Now this down here would be a perfect time to buy. However, you really don't know when that time is until you understand the whole process. And of course, there's lots of processes and we're not going to go over all that today because you never know when it's going to turn around. But buying low, selling high is what it's all about. Now, remember, we're not going to go into total detail on this, but in order to understand this better, we're going to have to look at some candles. Candles? Not these kind of candles. Okay, remember, this is just the basics, so I'm not going into detail because there's all kinds of different kind of candles. But basically, you might see some graphs that have something like this in it. This is what's called the body of the candle, and it's either going to be green or red. Green means positive, as if the stock went up. Red is negative, it means the stock went down. You might have heard these terms as bull and bear. Bull is up, bear is down. The way this works when it's green is that you have an opening spot and then a closing spot. It opened here and then went up to here. The stock or the time limit opened here and then closed here. Can you see that? It's kind of small. So when it opens down here and closes up here, it made money. Now this one's the opposite. It actually opens up here and closes down here. Opening up here and closing down here pretty much means that it lost money or went down in value. Now on these, you're also going to see some lines that go up or down or both. All this pretty much means is that it opened here, but the price went this way, then it went all the way up, then it went back down and closed there. And in much the same way, we started here, it went up, dropped way down here, but then closed right here. Hope that makes sense. What are those ones over there? When you see one of these without a body, it pretty much means that it opened, went up, down, but then closed right around the same price. So what does all this mean? It pretty much means try to buy low, sell high, or there's times to hold as well. If you have a share that went low, why did it go low? Is it because they're not meeting sales or they're going out of business? Did they lose a contract? And if the share is going high, why is it going high? Is it because they got a contract, they started selling a lot of business, they had some good returns, maybe they expanded business? Basically, there's always going to be highs and lows, but the trick is to know when to buy, and the best time to buy is when it's low. Now, here's a little tip. If the entire stock market is going down, that pretty much means everything's on sale. Pick those businesses that you feel are going to go up. No, actually, don't pick businesses based on how you feel. Do your research, read, learn, and come up with the best option for yourself. Now, one thing we do here for our clients here at J-Line is we actually have them purchase stocks around their life. What this means is you want to build your own mutual fund based on the businesses that you use and the places that you shop. And the platform we use for this is called Robinhood. The reason why we like Robinhood is because you can buy single shares and there's no transaction fees whether you want to buy or sell. Check out Robinhood. This is what it looks like. Now, of course, with stocks, you have an opportunity to make a lot of money, and then, of course, you have risk, an opportunity to lose a lot of money as well. With accounts like Robinhood, you have an opportunity for your money to go like this. But with putting your money into a bank, you're actually guaranteed to lose money because they don't give you any interest at all. Well, we hope this video helps, which it might not have. It might have just confused us all. And I'm sure there's a lot more videos out there that probably do a lot better job. But like I said before, this is the basics, so why not just like this video, subscribe to our YouTube channel, the J-Line Network, so you can stay up to date on all things to keep your life great. Buy low, sell high. And there is a time to hold as well. Never sell low.